Now we talked about finance, we talked about home inspection, and one important item that sometimes we forget until the end, and here the loan officer comes and say, "Where is my binder?" What? What binder? They are talking about insurance. If you are buying a single family home, you need coverage. You have coverage for the lender, and you have coverage for yourself on the home. And we are fortunate enough to have Dan Dennis from Allstate here to brief us about this. How do we go about getting a binder? How do we qualify? Is it only the homeowner, or the house has to qualify? Let us know all these things that is mystery to us.
Well, thank you, Kay. Thank you for having me here. I'm Dan Dennis. I'm with Allstate Insurance. And companies go about qualifying people many different ways. The standard tends to be looking at people's credit. So insurance companies will check the credit. Now, when insurance companies check your credit, I'd always ask if it's going to affect your insurance score. Allstate does not affect your insurance score because it's seen as an insurance score, not as a score for your mortgage or a loan. So it doesn't negatively affect checking your credit for that. We don't even get a score back. We just get either an acceptable or not acceptable. The next thing we check is if you've had homeowner insurance before. And if you've had homeowner insurance before, we will check the national database called ChoicePoint, where if you've had any claims in the last 3 years is usually what most companies look at. And they're looking for a water claim, a theft claim. Some claims do not count against you, but usually a theft or a water claim can keep you from getting insurance with some insurance companies. The basic coverages you need to have to secure your loan for homeowners is going to be dwelling coverage. Dwelling coverage will be the replacement value of the home. Oftentimes people mistake that they're buying a home for $1 million, therefore they need their dwelling coverage for $1 million. That is not so, especially in Hawaii, where our land value holds so much of the value. Oftentimes $1 million home might actually only need a replacement value of the dwelling for $500,000. So again, our obligation to you is to rebuild the house at the cost that it takes today's building codes. Secondly, you want to make sure that you have building structure extended limits. Some companies call it guaranteed replacement cost, but nowadays it's not 100% replacement cost on the guarantee. It'll be 120%, 135%. It depends on the company. But what that is if you have a home and the replacement cost is $500,000, the building structure replacement cost of 120% is going to ensure that up to 120% of the coverage, meaning you have gap coverage. So if the house did burn down and it costs more than $500,000, we're going to cover it up and beyond that up to 120%. And that's a good thing to have, especially when there's high inflation. Maybe the inflation has gone up quite a bit, oil prices are high, building costs are high because there's been disasters in other parts of the country. So suddenly your house burns down, and it does cost more right now because of inflation or other disasters going on worldwide. The other part will be other structures. If you have other structures such as anything detached from the house and does not share a common roof line with the house, such as a rock wall, a fence, a pool, a gazebo, these are examples of detached structures, or even a detached garage. You'll need other structure coverage. Most insurance companies will offer you 10% of your dwelling coverage. So again, if you have a $500,000 home, 10% of that, you're automatically going to have $50,000 for other structures. In most situations, I find clients do not need to add other structure coverage unless for some reason they built a bonus room, they have a garage, and it's not part of the house, and maybe it's more than the 10%, and we need to add coverage there. Personal property, most insurance companies are going to give you 70 to 75% of your dwelling coverage towards personal property. Personal property is if you dump the house upside down and you think of everything falling out, from your table, your clothes, your rugs or throw rugs, anything that's not part of the house is your personal contents. Now, there are limitations on certain perils with contents, and you should always ask your agent what those are. Certain items such as jewelry, silverware, firearms, and things have limitations when it comes to theft. And many people, unfortunately, don't know that until they have a claim. So I make sure that you are asking the right questions on that.